Imagine being able to buy a car, some fresh fruits, or even a new video game from another country without paying extra taxes or fees. That's what NAFTA made possible. Today, we're diving into the world of trade agreements, starting with NAFTA, the North American Free Trade Agreement, and how it shaped trade between Canada, the US, and Mexico. We'll also look at NAFTA's modern version, the USMCA, and see how these agreements affected jobs, businesses, and the economy in Canada. Let's explore how trading across borders changed over the years. Brought to you by Super Simple Sheets. From coast to coast, worksheets that work. Discover the full range of what we offer at supersimplesheets.com. Section 1. What was NAFTA? The North American Free Trade Agreement, or NAFTA, was signed in 1994 by Canada, the United States, and Mexico. Its purpose was to make trading between these three countries easier by eliminating tariffs, which are extra taxes on goods when they cross borders. Before NAFTA, if a Canadian company wanted to sell something to the US or Mexico, they would have to pay these tariffs. NAFTA removed most of those barriers, making it cheaper and faster to trade goods. Because of NAFTA, the amount of trade between Canada, the US, and Mexico grew rapidly. In fact, within a few years, trade between the three countries tripled. Canadian companies began exporting cars, machinery, and natural resources like lumber and oil without facing extra costs. This increase in trade helped Canada's economy grow and created new opportunities for businesses across the country. Section 2. NAFTA's impact on jobs and the economy. NAFTA wasn't just about moving goods. It had a huge impact on jobs and industries, too. Some Canadian industries, like the manufacturing sector, saw big benefits. For example, Canada's auto industry was able to easily move car parts across borders, helping the industry thrive. But NAFTA also brought challenges. Some factories in Canada moved their operations to Mexico, where wages were lower. This meant that while new jobs were created in some areas, others saw job losses. For example, industries like textiles and clothing manufacturing struggled because it became cheaper to produce goods in Mexico. While NAFTA boosted Canada's economy overall, it wasn't perfect for every industry. Section 3. The shift to USMCA. In 2020, NAFTA was replaced by a new agreement called the USMCA, or the United States-Mexico-Canada Agreement. While similar to NAFTA, the USMCA made important updates. One of the most significant changes was related to the car industry. The USMCA required that more car parts be made in North America and that auto workers earn higher wages. This change was meant to keep more jobs in Canada and the US, reducing the number of factories that moved to Mexico for cheaper labor. Another key area that the USMCA impacted was the dairy industry. Under the new rules, Canada allowed more US dairy products into the Canadian market, which was a big change for Canadian farmers. In return, Canadian farmers gained better access to US markets, making the trade of dairy products more balanced between the two countries. Section 4. The effects of USMCA on trade and jobs. The USMCA helped protect Canadian jobs, particularly in industries like auto manufacturing. By ensuring that more car parts were made locally and workers earned fair wages, the new agreement aimed to strengthen Canada's economy while still promoting free trade. However, there were also new challenges. The USMCA brought stricter rules for digital trade and intellectual property, affecting industries like technology and entertainment. While the focus of the agreement was still on goods like cars, agriculture, and machinery, the addition of digital trade regulations marked a step forward into modern trading. Despite these challenges, Canada continued to benefit from trading with its neighbors. Trade with the US and Mexico remained strong, and businesses kept growing thanks to the smoother flow of goods across borders. The USMCA kept Canada connected to one of the largest free trade areas in the world. Conclusion: from NAFTA to the USMCA, these trade agreements have played a major role in shaping Canada's economy. While NAFTA opened doors to easier and cheaper trade, the USMCA updated the rules to protect jobs and industries in Canada. Both agreements boosted trade between Canada, the US, and Mexico, helping businesses grow and creating new opportunities across the continent. Thanks for watching. Simplify your teaching journey with super simple sheets. Across Canada, we're known for our ready-to-use, curriculum-aligned worksheets. Dive into our educational solutions at supersimplesheets.com. Super Simple Sheets. From coast to coast, worksheets that work.